Boom! What's going on, everybody? 360 Digital Closing Bell here, daily energy market summary. We're live on YouTube from an undisclosed location here in Denver, Colorado, on this gorgeous Tuesday, September 29th, 2020. As always, I'm your humble correspondent, Michael Dinner, joined by the executive producer of the show, the purveyor of the show, the director and publisher of the world's greatest website, oilandgas360.com, international news aficionado, international man of mystery. I can't come up with anything more to say. Stuart Turley, how you doing today?
It's a beautiful day in the neighborhood, and we're having way too much fun.
We do. For the amount of for how much we work, we have way too much fun. So that's good. And we have a great show for you guys lined up today. Wild day in crude oil. We saw all the way down to $41, then we saw $38. The oil ended up settling about $39. We'll cover everything that happens. Natural gas up 20%. Not really, but we'll cover why that happened. Stu's got some stuff in the international news desk. Colorado approves the 2000 setback law. We'll cover everything in the energy equity markets. But first, guys, just subscribe. 360 Digital Closing Bell, iTunes, Spotify, YouTube, via Entercom. The best way to get all of your energy market news. We look at the overall markets today. First loss we had on the overall indices in terms of in the last four trading sessions. That was mostly due to increasing coronavirus numbers, specifically on the East Coast. You talk a lot about who trades these indexes, big banks, where big banks located in New York. So when we see a spike in coronavirus in New York, it's kind of going to lag the major industries down. And that's basically what happened for the first time in New York. Coronavirus tests were positive above 3%. So not a good look, but it'll be interesting to see how that stuff played out. Definitely caused some sentiment. We also saw consumer confidence jumped way more this month than the last two previous months. It was expected to come in at 90.1. It came in at 101.8 for September. So really, really good on the consumer confidence. It's part of the reason why I think you've seen a complete recovery in a lot of these indexes. When we look at crude oil, as I mentioned, down 3.5 percentage points. So pretty red, 39.04. Big reason for that. Libya, a new ANX report out. This is going to kind of cheat on the international news desk, but ANX came out with a nice report. Libya is now tripled their oil production since July here. So that's a big, now another just bearish fundamental piece that comes out, continue to drive oil down 39.03. Like I said, $41 was the ceiling. If you were selling oil at that point at the beginning of the week, you probably made some profits on the day trade side. 12-month strip doesn't, 12-month strip gets hammered as well, 3% on the downside, 41.57. So just all around both that short-term and long-term contract not doing well today. Natural gas depends what pricing you're looking at. If you're looking on TradingView, it was up to $2.51, but it was up 19 percentage points. If you're on Bloomberg, it was up to same price, $2.51, but it was down 8%. Well, we had a contract rollover today, so we moved from the October to the November contract for natural gas. So yes, we did gap up from the previous contract, but it did start out at about 261. We've decreased about 8 percentage points, currently trading them about 251. So, I mean, hey, there you go. Really what I'm looking at is that 12-month strip was down 4.6 percentage points, so only about half, $3.06. So we're still waiting for that real big jump up in natural gas. It'll be interesting to see as we look towards Thursday to see what happens with natural gas prices. We're going to be doing a little more on the LNG side here actually coming up, so I'm excited to be rolling some of that stuff out. On the XOP on the E&P side, or XOP contract 41.45, that's 3 percentage points on the downside. So red all around. It's kind of funny. Day after a merger sends everybody up 3 percentage points, industries back down 3 percentage points. So I think all is right with the way energy equities are being traded. Oil field services, 98.46. That's $2.70, or about 2% on the downside. Liberty was up to $7.88, or 3.5 percentage points. Again, probably people listening to the podcast we've been releasing with that. On the downside, couple companies specifically on the gas side get pounded. EQT down to $12.99, 7.5 percentage points. Contura Energy, $7.31. That's 10.5. And Peabody Energy down 21 cents. Why, Michael? Why are we covering coal? Well, they're down 21 percentage points due to the fact that they've terminated a joint venture with Arch Coal. And it was actually on the Arch Coal side, partly because they are after a U.S. district court's ruling blocked the merger. So now the government's not letting coal companies merge. It was supposed to bring $120 million in annual cost savings, driving Peabody Energy down 21 percentage points. So we just talk about a lack of demand for thermal coal. I mean, that's, I think, really what that shows. Stu, what do you got on the international news desk today?
Hey, Michael, we got a couple things. I know your discussion with Libya, it's because Turkey's helping them out. So
You've been
they
covering it. It's just interesting
yeah.
to see them cheat. We I think we knew that might have happened, but now to confirm the cheating, I think it's really dragging oil markets down today.
Oh, absolutely. Hey, do you remember 2 weeks ago on our BP week we covered? They were saying, "Hey, the end of the world is here, and oil is peak demand." Well, Total just joined that same scenario,
Right.
and I thought it was pretty funny. There's a little bit of math. We do math on crayons around here,
We do math with
and
crayons on
they're
napkins.
saying that with crayons on napkins, and they were saying that the majors are looking to become electricity companies rather than they're just going to be energy companies.
You mean utility companies? And it may
Electricity will compete with 30 to
for people to understand why
they're going to.
But why? I think the question, Stu, is why would they think that? I think right away, quick, I want to jump in, is utility companies have stabler but
Yep.
smaller returns. They're more stable. When you look at, we talk about the XOP contract.
Right.
When you want to, when the overall markets don't do well, utility stocks do very well because they're seen as a safe haven. So there's an economic reason for it as well.
Okay, here's the really goofy thing. It's not in this article, but it does say that Total is natural gas heavy. They're going to continue their natural gas. They're not going to dump it like BP. The other thing is all of the energy companies, all of the other energy companies and electrical companies get into cable TV. So how long before Exxon is going to be in cable TV? All right. The next
When's
story,
Exxon's streaming service coming out? What are they going to call it? Exxon Plus? Going to be able to watch? They'll have what's the one with Marky Mark with on the BP oil spill? What's the name of it?
You got me, dude.
I remember we watched that in college, and we watched it as a baseball team. And I remember my dad's an aerospace engineer, watching old movies with him about people who go to space. He just has to pause it every 10 minutes because there's something wrong with it. That's what I felt like sitting through that movie. Deepwater Horizon. Oh, the PP. PPE was bad. You think the PP was bad in that Chinese image? Talk about that movie.
Well, that would be a Scooby-Doo moment on Deepwater Horizon Rutro. Okay, the next one is ESG. Michael, we've always said on the show, good management, good numbers. We've also said no ESG, no access to capital. What's coming around the corner is Europe has already come into its own as far as ESG regulations. And the Organization for Economic Cooperation and Development out of the U.S. basically said that ESG investing is coming to a major crossroads because people are demanding ESG investment and there are no standards. And so what everybody's looking at is if it is left unaddressed, underaddressed, challenges in ESG investing could undermine investor confidence in ESG stories like indices and portfolios. He's dead on right. And so, we're going to see more regulations coming over from the U.S. You better know who knows ESG, and you better get on board. Okay, that's from ESG. Thank you.
Yeah, I think the biggest thing that also goes along there is the transparency of what ESG data actually is. I know Bloomberg rolled out a really nice new ESG scoring system. I know there's some other people, but I think really that's something I think is coming to head in the marketplace. Is if ESG investing is going to be demanded by investors, how do you qualify what actually is a good ESG company? I think there's something to be made there.
You are dead on right. And things that come from Europe are not always good. In this case, they may be. Hey, London Energy up in Norway, outstanding. Shout out to them. They've been doing some very cool things. This doesn't come across very well, but it is a beautiful offshore rig. I'm looking like Vanna White here. But it is outstanding. They have increased their MMBOE by 50 million barrels of equivalent oil equivalent. Unbelievable increase in their reserves just now, and so I'm really just giving them a shout out on that kind of an increase. So well done, guys. So
Yeah, no, definitely. It'll be very interesting to see how all that stuff plays out. Thank you for that international news update. When we look on the shale side, there's really two things that I want to look at, and I think the first is, as we mentioned, why crude oil prices spike down today. But really, it's bearish supply demand fundamentals. If coronavirus is going to continue to increase, we're going to see specifically on the 3% increase on New York. That's going to bring down markets as there is. When we find now that the supply of oil, and specifically Libyan, as we talked about in this research note today, has been cheating and now tripled their oil output since July, when demand really hasn't come back enough to support that, it's not going to look good on the price of oil. And I think that's what you're seeing right now. I think it's choppy waters ahead for crude. The other interesting thing that happened last night, and really that's rolling out this morning, is we talked about 2 weeks ago or a week and a half ago, the Colorado Oil and Gas Commission voting on establishing 2,000-foot setbacks on new oil and gas fracking. Well, yesterday evening, they unanimously approved moving it back to 2,000 feet. These new series of rules fall within Senate Bill 181, which was expecting to increase a bunch of different regulations, but specifically moving back from 500 to 2,000. So now the Colorado Oil and Gas Commission has approved that, and it's set to take law starting January 1st, 2020. Just to give you 2021, just to give you an idea, Stu, there are three companies really badly affected by this: PDC Energy Extraction, which is now in Chapter 11 bankruptcy, evaluating a bunch of different options, and Occidental Petroleum. To give you an idea, 89, 73, and 71% of, like I said, PDCs, extractions, and Occidental's total gross acreage falls within these boundaries. So you're going to have to go out and acquire now new acreage if you're going to want to drill. I don't know if this clearly, I think, is going to restrict the amount of people who are interested in buying extraction. As we said on the show a couple days ago, High Point Energy was one of the companies that was recently talking about a merger. They're a Colorado DJ player themselves, so they have familiarity, not just with Colorado, but with the regulators in Colorado and how things are going to play out. But I think what this does, specifically if you're an extraction shareholder, not good, because this is going to wheedle down the number of potential interested companies. And I think this increases the likelihood that extraction, whether it rebrands themselves or comes out with their same name, just decides to see if they can continue on with their assets, and hopefully a rebound in price of oil can help you. But we've already talked about the potential fallout from PDC. They have some, Senate Bill 181 as a massive fallout considering for PDC. There's some other things talking about where they can and can't drill, and there's also some new tax liabilities that are falling out. So we're covering Senate Bill 181 pretty closely here. Oil and Gas 360. Recommend checking out. We have that on the world's greatest website, www.oilandgas360.com. Besides that, it was just a fallout from the Devon WPX deal. I think if you looked, if you weren't on, if you're on Twitter, the deal sucked. If you're an industry analyst, I think it was actually fairly positive. We had president of Enercom, Aaron Vanderford, on the show yesterday. He loves the deal. I like the deal from the standpoint of it probably means that you're going to, if you're a Devon shareholder, you're getting lined up to get acquired again. I think if you're a double PX shareholder, poor Felix. That's just how I feel about that. Poor Felix employees. But through all that, I think this is, Stu, I think if, sleeping on this for 24 hours, I do feel good. I think this is a move to hopefully maybe then go get acquired by one of these large majors. I mean, 60% output is going to be in the Delaware Basin. If there's any oil basin, at least U.S. shale-wise, that might make money, it's probably going to be the Permian. You got anything else on the today?
No, it's just been a very busy day, and I agree with your assessment and Aaron's assessment on the Devon issues and things. I think it's actually a good move.
Yeah, so we'll be covering all that, like I said, at the world's greatest website, www.oilandgas360.com. And with that, we're going to go ahead and let you guys get out of here, get back to work. For Stuart Turley, I'm Michael Tanner. Thank you for checking us out. You can find us on iTunes, Spotify, and Enercom's YouTube channel, live on YouTube from an undisclosed location, 2 p.m. Mountain Standard every single day. We'll see you guys tomorrow for the Digital Ticker.